Yeah, this is a stock trading video, and I'm gonna do a hook. 1 million seconds. 1 million seconds is like 11 and a half days. Wait until I tell you what 1 billion seconds is. It's how many years. Can you guess in the comments before I tell you? Let's go into this. This is the S&P 500 ETF called the Spider. This is a daily chart. If I pull up candlesticks, you're going to look at it here. But because of the candlesticks, I'm going to go. They a little harder to see for most people. I'm going to go to a line chart to make it easy. Here is what I want you to do. Okay, I want you to pay special attention. I'll get rid of a line to simple this up. In an uptrend, higher swing highs, higher swing lows. In an uptrend, okay, all is going well. Now, you'll notice I have a red line going up here and then another red line going here. Look at the trajectory of this red line versus this red line. Do you see how it's sloping down? It's getting weaker. The thing I want to point out here is we missed hitting resistance right there. See that? And then we missed it again, but by more. Look at the distance between this line and this price action, and that line. Do you see the negative space is greater here? That is showing a rollover, a slowing of momentum, a high being put in. Now, why is this red line here? It's because we look at something when I bring in other indicators, you can see them down here. That red line is showing price action going higher, price action going higher. The MACD centered oscillator, which is an indicator, but more specifically an oscillator, has lower swing highs, making a bearish divergence anytime that correlating with what we're seeing above, same time frames. So this swing high went to a higher swing high. This swing high went to a lower swing high, and it continues. The longer that lasts, the more powerful they can become. In other words, whatever this is doing is what this will do next. That is the theory, and it happens more times than it doesn't. We also have an RSI, relative strength indicator, confirmation. Lower swing highs, higher swing highs. Do you guys see that? That's why we did that. So what I have been seeing in the last week are these missing these highs. It's slowing down, slowing down, slowing down. On the S&P 500, now watch this. Let's go to the diamonds. Take a look at the diamonds. We are in what's called a rising wedge. These are bearish trend reversal formations, rising wedges. And we are at an apex. That means this thing has a better chance of going down than it does going up. It can still go either direction. The markets can be crazy, irrational, and do crazy stuff. But that's what I'm looking at, is this thing is looking to start breaking down here. Get down to this trend line, then maybe a bounce, and then a drop again. That is what I foresee going into the future. If you look here at the Nasdaq, let me go back to the diamonds. Hold on, I didn't show you the bearish divergences. Look at this. Price action going up, MACD going down, RSI going down. It's bad. Qs. Let's go to the Qs. Qs. MACD going down, RSI going down. Let's zoom in. And this was a rising wedge. It broke down. Now, what is fascinating? Q's building what's called a bullish pennant, though. It broke down, but it didn't really release its ghost. It didn't just come crashing down. What it did was it maintained its high. So I drew these lines. That's a bullish pennant. Look at this bullish pennant. Those are more bullish than they are bearish. Now, I'm going to show you something, though. If I pull in candlesticks and look at this, look how we had gapped up and we sold off. Do you guys see that? So that's giving me what's called a redhead. I'm throwing too many jargon at you right now for this basic video, but that's telling me we have a really good chance of a sell-off commencing, coming down and breaking down. This will be a failed bullish pennant if this lower trend line, that red one, gets violated. And this moving average that's coming up right here, and this moving average is the 50-day moving average on the QQQ. Will that hold? It's been a hot minute since we've been below it. Let's see what happens here. Now, the Russell 2000, okay? Russell 2000, the IWM, very important. I want to see what that is doing. What I know is this thing rallied up, went to that trend line, touched it, came back down. Now we have a doji at this up leg. So that is a reversal candle at major resistance. If I go to a line chart and then I pull in a trend line, you'll see that I have this trend line going right there to that one. And we have a rising wedge. Rising wedge. We can extend this up. Rising wedge. We look at the MACDs. It looks flat, but if I were to blow up this MACD and take a look at it, it is dropping. It is dropping. But rising wedge, bearish divergences confirmed. That is very interesting. Go to this. That's a doji at the top of a leg at resistance, going into the apex of a rising wedge. This is crazy jargon, and this is financial literacy that we do teach. If you haven't become a or been taught by us as mentors, you need to do it. We're traders first, mentors second. But here's the big one: XLF financials. Whatever the financials do, the markets tend to do. Rising wedge, bearish divergence. You come here, bearish divergence on the MACD, bearish divergence on the RSI. And on Friday, we opened at resistance. We popped up a little bit, and then we sold off by day's end. Guess what? Breaking a major trend line, guys. That's telling me that the markets are wanting to get slippery dickory dock straight down this clock. So this is the high is probably coming in. Look at the mass volume on the sell side. This will lead. Look at small caps leading. If the Fed comes out and says we're cutting the rate, that might send the market straight up. That can and it might happen. There's an 85% chance that will happen at some point here in September. But outside of that, the markets are in very big trouble. I'm going to spare you the weekly and the monthly at this moment. I think I've given you enough. Now, okay, gang. 1 billion seconds is equal to 32 years. 1 million, 11 and a half days. 1 million seconds, 11 and a half days. 1 billion seconds, 32 years. Now you have a great understanding of relativity when it comes to the relation between million and a billion. It is astronomical. So anyway, there it is. Woo! So a couple things that you should probably know. We're in the process of updating the website. We're in the process of doing some cool stuff that we're building in. We are mentoring. Again, we don't take everybody. We've continued to have to say no to some people. We need people that have great discipline. We need people who have great emotional resolve. And we need people that also have the means and the financial means to be able to trade. I wish we could take everybody. We just can't. We're traders first. I run a hedge fund. We only allot 1 day, trading day out of the month to teaching. The rest of it we do with our own trading. And that says a lot. A lot of our competition that's out there, what they do is they're very much about teaching on as much as they can and not trading. Why are they not trading? Big question that I ask, but we allow free retakes, and we're real traders, free retakes, and we're sizably less expensive than a lot of these big box groups. So I highly recommend that you look into the mentoring. But with that said, I hope this was very educational for you. Let's see what happens this next week. Let's see if the markets do fall out of bed here. It'd be interesting to see what the administration might do to keep this market held up, but right now it looks pretty bearish to me. So thank you for letting me know where you guys were from. We had Israel, we had New Zealand, we had a bunch of different countries. Shout out to all you guys. So really love the fact that you guys, participate and share your thoughts and stuff here. I do have a question for you this time. I do have a question for you. If you won the $1.7 billion Powerball that was just going on, almost $2 billion worth, I would like to know the top 3 things you would do with that money. The top 3 things, and give that some serious thought. Top 3 things. You can be funny if you want to. You can be highly pragmatic. But I'd be interested to know the top 3 things. You don't have to be overly specific, but I'm very interested in that. So if you made it, you made it. Say it in the comments. Take care. Give me that thumbs up. Doesn't cost you one thing to do it. Catch you later. Bye.